One of the big investing themes of the past couple of years has been the rapid development of artificial intelligence. But where are we in that evolution? What does it mean for investors? Joining us now to discuss, Evan Chen, VP for Portfolio Research with TD Asset Management. Great to have you on the program. Great topic to chew in here today.
Thank you. I bet you never hear about it.
Never hear about AI, but you know what? I mean, we hear a lot about it because if there's something happening here, and it's probably going to be very important for all of our lives and for our investing lives. So let's start with a bit of an update on the AI universe, how it's shaping market returns, what's been working, and I think you have some pictures to draw for us.
Yeah, so I have a framework and my contribution to some of these triple B things that are coming out, the big beautiful bill. Well, I have the boom, build, and benefit framework. Before we launch into that, I want to draw a quick picture as a way to ground ourselves here.
All right, so we're going to telestrate on the show. This is what we call this. We call telestrating when you draw over maps.
So I'm no artist. You have to bear with me here.
We got a line. It's going up. Usually that's good.
There we go.
We got a line going down. I'll reserve judgment on the line going down. Another line going down.
So this is what we call an S-curve. It's something that analysts have used for years now to describe life cycles of new technologies. So this first part of the curve, the left part, is what we call the initial growth phase. So this is a new technology, call it AI, call it the internet, call it Rails, call it phone lines, whatever. It's a slow ascent up because the market's not quite there yet. Maybe the technology's not there yet. There's barriers to market adoption. But as we get to a critical mass, we hit the second point. This is the S-curve. This is what we call rapid growth. And this is where this technology is used more and more often. It becomes standardized across industries, across workplaces, across daily life, and rapid growth. Then finally, we have the plateau where we reach market saturation. There's really no more room to grow here, and it grows in line with basically GDP. So I think a lot of people would argue that we're in the second part of the growth, so the rapid growth phase. There's a lot of new websites out there, apps that use AI, but I would argue we're more in this initial growth phase still, and I want to go through that framework with you.
Okay, so let's go through that growth phase, right? Because I think that's a big question for people. Are we in the chip phase? Are we in it starts to become a part of my daily lives? And I think you're saying we're getting in that next phase there. So walk us through all the parts.
Yeah, so the first phase, what I call boom, and boom is the critical mass of chips needed to actually make AI models like ChatGPT. So I like to think of chips as the heart of AI, being constantly churning out calculations used to power the models. If we look at chips, NVIDIA, I'm sure everyone knows, the stock has been up 900% in the past 2 years, with it dragging up the entire semis index up 90% over the same time frame. But we've talked enough about NVIDIA. I want to explore, what's next.
So what is next? If the chips are the first thing, the heart of what's going on here, where do we take this?
So the second is what I call the build phase. So the build is the $700 billion of CapEx that's going into data centers. So it's being built by the hyperscalers, so that's Microsoft, Amazon, and Google. And then there's also some neoclouds, GPU clouds, Nebius and CoreWeave. So I like to think of the data centers and the build infrastructure layer as a nervous system of AIs. So it's translating that heartbeat into where it needs to go. Data centers were initially used in the cloud and the internet days to connect everything, and they're used the same as AI, connecting the compute to where it needs to go to power some of these models. So we know that there's a lot of demand. All the hyperscalers, Amazon, Microsoft, Google, have all said that there's too much demand for the supply. So where's that extra demand going? Well, we've seen it run up in the stocks to the neoclouds, Nebius and CoreWeave, up 200%, 50% on the year, as there's just too much demand here. So I think this area is just getting started. I think it's just inflecting up in that S curve. So if we look at the curve, chips were infinitesimally a small part, and I think we're moving to the beginning of this area here with the cloud.
That's interesting. So if the boom, the chips are just a small part of all this, and they build the cloud, the infrastructure is starting to take hold, the benefits. I think a lot of people have been asking those questions, right? I've seen the run up in the chips. We're hearing about AI all over the place. How does that going to affect my daily life? Where's it going to start permeating through society?
Yeah, benefits where we would get to the good stuff, get that S curve going. So benefit refers to applications or the software layer. So I like to think of the benefit or the software as the voice of AI. So all the stuff is in the back end and the data centers and the chips, but for it to interact with the real world, it needs a voice. So this talks to businesses, it talks to people, and this voice is just getting louder as we see more and more use cases come out there. So I have a couple examples. Salesforce recently crossed $100 million in ARR for their product Agentforce. It's driving deals at ServiceNow, also crossing $100 million in ARR. And even here in Canada, Thomson Reuters is driving 20% of contract value and driving accelerated revenue growth. Now, if you asked me last year, where do you think we'd be in the cycle? I think we'd be further along in the benefit, and we see more dollars at play. But I think what's interesting is that the software companies are taking a page from the playbook of social media companies. So what this is giving away the product for free, getting people building around it, used to working with it, and then ultimately hooked on it, and then monetizing it later. So we see this with Salesforce, with 4,000 paid customers out of 8,000 total AI customers, but only 800 of them are in production, so actually facing the customers, only 10%.
So if those are the three stages here, where are we headed with all? I think it's the big question for people, because a lot of say there's a lot of opportunity here. It's going to do a lot of great things. A lot of people are worried about some of the things too. What are these great promises?
Yeah, let's dream the dream. Like, let's roll the clock forward 5 years. What does everything look like? I think we all have like a data center on our phone. So something that would use to train the AI in a huge facility is now in our phone. I think we're going to be talking to an AI more often than Alina from accounting. It's going to be working with you side by side. I think someone who has a business of 100 people before may only have 5 to 10 people, as they have trusted lieutenants doing the tasks that a team would before. In dreaming this dream, I think it's tough to see exactly where it goes, but I like to bring it back to maybe the mid-90s of the internet. So, I was just getting born then, so I don't know exactly what happened.
I remember 14.4 dial-up modem, and even I was on it just before the Netscape browser came out. So you're like hitting little dialogue FTP boxes to chat with people. That's how rudimentary it was back in the day.
Yeah, so let's just bring it back to the 90s. We didn't know exactly what was going to happen with the internet. You could talk to people, you could read the news instead of having a newspaper. But if you fast forward, right? What did it allow us to do? Connectivity, it led to the iPhone, it led to Uber, taxis from your phone, right? Like this didn't exist in the 90s back when the internet was still around. So I think it's going to be the same thing with AI. I just say to the viewers, think big, think bigger than even what you think this is going to be.
Now, some of the viewers may have heard we're not going to talk to Alina accounting anymore, or someone's going to be able to reduce their workforce from 20 to 30 people to 10 people. They said, well, I'm the human equation in all this. I mean, let's talk about some of the risks here. I think some people are just worried about the disruption to the labor market, and obviously some people have bigger concerns about AI.
I think for sure disruption to the labor market is going to be something to watch. I think generally in history, though, people have found things to do. And what we were talking about earlier of these new business models that don't exist quite yet, I think there's a lot of opportunity there that we just don't know about, and for people to find other things to do. More importantly, on the risks, I can't tell you exactly how this is going to work out. Think about every sci-fi novel. They had teleporters, they had cell phones, instant communication like Zoom. Well, we don't have teleporters, but we have Zoom, right? So I can't tell you the path of where we're going to go, but I think what's important for investors is to find out who the winners are, and then they will carry you forward. So something interesting, what I think about the winners in this technological revolution is, unlike in previous cycles, I think the incumbents are the ones who are going to win. So the reason for that is I think they have all the right stuff here. So they have billions of dollars in CapEx in the ground, so those data centers we talked about. They have all this customer data for years and years of scraping whatever we do online. And they have the right people. They have the smartest people working on this stuff. The only question mark here, I think, is attitude. Are they willing to disrupt themselves and their business model to do what it takes to come into this next layer of technology?